Good day everyone, my name is Dominic,
And I'm Jimmy.
and if you're new to the channel, welcome. If you're not, thank you so much for supporting us all this while. Just remember that every like and subscription goes a long way in supporting our video production. Wait, before that, disclaimer. None of the content produced in this video should be used as a substitute for professional investment advice, nor does it constitute an offer or solicitation for investment related products. It will also not induce the creation of any binding legal relations. Okay, for real now.
In this week's podcast, we'll be doing a long-term analysis which will build on the analysis from the past two videos.
But just a recap from the previous two videos. I mentioned how we were almost 90% certain that we are going to be headed for a second market bottom, and our sentiment still stands. The longer term RSI, which is short for the Relative Strength Index, don't worry if you've never heard of such a term before, we will explain it in a future video. But basically, the long-term RSI has hit the highest level it can hit ever, which spells impending doom. The Volatility Index chart, otherwise known as the VIX, is also at unprecedented levels as well. And as things get volatile, prices can easily head in any direction, which lowers the possibility that the market is actually heading for higher highs. This combination of severely oversold RSI along with the high VIX index can be closely compared to all the big recessions in the past, such as the 2008, 2000, and even the 1929 Great Depression.
Wow, seems like all the strength of the technical data is too strong to ignore. Looking towards the future, our prediction is that disruptive companies will be the ones who can best weather this storm and emerge out stronger than before. Look at the companies like Amazon. Their stock prices have only been going up higher and higher with each passing day. If we take a closer look at the technical fundamentals of the charts as well, previous resistance level that we see in stock market charts will most likely be broken in search of newer heights as these companies ride the recovery wave.
Yes, correct, but again, I know all of you watching this channel are smart, so you guys can think further than that. The most obvious example that comes to mind is e-commerce, companies like Amazon, JD, Alibaba. But what about streaming platforms over conventional cinema, things like Netflix and HBO One? And what about private jets over commercial ones, things like SPC, Virgin Galactic? This opportunity is too good to miss considering the current headwinds.
The virus is a catalyst, to be sure, but even without the virus, this was always going to be a catastrophic recession. The Fed can't actually stop recession, and they already used up most of their ammo in 2008 and weren't able to replenish their reserves. Historically, a central bank has usually needed to cut interest rates by 4% in order to stop a recession, and cutting into negative rates doesn't have the same effect. The US got nowhere close to that. On another note, WHO officials said not all people who recover from the donut can fight the second wave of infection. WHO's lead scientist, Dr. Maria van Kerkhove, mentioned that while the effectiveness of the donut in infecting people increases very fast, it decelerates much more slowly. And that would only mean that the lockdown measures would have to be more gradual rather than be opened all at once.
Yeah, that's true. Some, including nervous foreign policy watchers in the West, warn that the pandemic will not only be remembered as a human catastrophe, but also as a geopolitical turning point away from America. What do you guys think? Are they right? If they are, could we see China becoming one of the centers of economic activity for the next few years?
I think we can't doubt anyone when they say that China is going to overtake US as the world's next big economic superpower. That was destined to happen. China is going to open up earlier than the US, and most of their manufacturing factories have easily gotten back to full speed. One of the most prominent examples include Tesla's Gigafactory in Shanghai. They even worked throughout the donut season.
Yeah, but the problem still lies in the slowdown in retail sales. Some of the anecdotes mention how most people were still not comfortable with eating at communal dining areas. And even if we were to look at America and their whole great reopening, their rush to reopen is understandable, considering all the jobs that have been lost and the paranoia to keep up with China. But a blatant rush to return to normalcy could result in a dangerous relapse. And if the main goal of reopening is to restore confidence, a relapse may result in further damage than before, particularly towards vulnerable old workers. According to Thorsten Slot, chief economist at Deutsche Bank, the old age group, such as those over 55, comprise over 35 to 45% of the American population.
We also need to take into account those high contact occupations that are more at risk after the reopening. According to analysts by the Federal Reserve Bank of St. Louis, barbers, hairstylists, and cosmetologists top the charts. And an even more shocking statistic would be how hair, skin, and nail salons in the US generate roughly $5.2 billion in total revenue in 2018, data straight from Statista.
We have come to the end of this video and I hope I helped to clarify all your doubts. Again, it means so much to us if you leave a like and subscribe to our channel. The most important takeaway for today is how this recession will be one of the biggest opportunities for companies who are able to innovate and break out of their old shell. We will also be sharing some tips on how to identify such golden companies in next week's videos and whether you should buy into them. So please stay tuned. Wait, just before I go, I would like to share a good quote which I recently came across, which best describes how you can tide over this market crisis smoothly. The quote goes something like this: "The way to attract good luck is to be reliable in a valuable area. The more you repeatedly deliver value, the more people seek you out for that value. Your reputation is a magnet. Once you become known for something, relevant opportunities come to you with no extra work." With that, see you in the next video, guys.